We are live. We are heading live, baby. All right. Listen up, ladies and gentlemen. We got a huge show for you today. Let me make sure everything's up and running before I just start chitty-chatting and not know where I'm at. All right, today's going to be a good day, guys. Let me hit you with the intro, baby. All right, here we go. We got to make sure everything's up and running. Everything's looking pretty. There we go. We're here, baby. We're here. We're up. Right, we're ready. We're started. All right. Listen, we have a ton to go over. We have a ton to talk about. Let me go ahead and throw this away here. So what happened today in the market? Well, I told you guys we were expecting to come down and bounce off that 21-day moving average, and we did. But here's a key piece of information is we ended up bouncing off of it beautifully. Absolutely beautiful right here. It was beautiful, I tell you. But then we headed right back down. So this was the 21-day moving average right here. We bounced up. It was absolutely beautiful, glorious. I felt so proud. Hey, called another one, another 21-day bounce, and then it just came right back down and headed lower, and we have higher volume too as it's pulling back. So like a tree in the wind, we need to be very malleable when it comes to this. You guys know when we break a 21-day moving average in the S&P 500, I am hands off. So what do? I sit back, I relax, and I wait. I look for what is the strongest in the market, and then we lie in the wait. We wait for our base breakouts. We wait for our trend breakouts. And I appreciate everybody being here. So we're going to start with that, guys. First, I want to say thank you. I wrote down a few things that I just want to go over with everybody in the community, okay? First of all, thank you so much for being here. I appreciate everybody for being here. We are already up to, what, 830 subscribers. 830 subscribers. If you want to be a part of this community, you're more than welcome to. It's absolutely free. It's just a big group of free information. We all work on the same things. We're all focused on two things: base breakouts and trend breakout strategies. We focus on the William O'Neill's teaching, where we find uptrends, we find big breakouts, pullbacks, and then we look for the trend breaks, the cup and handles, or the base breakouts, and usually those are all working together. We use the 10, 21, and 30-day moving average, sometimes the 50 and the 200 as well, to understand where things are coming from. If you don't have a strategy or a process, if you stick with me, hit that like and that subscribe, you will find that process very, very soon. Carly Worrell says 8:30 with the praising hands. I like that. Dan Bob says tacos. Good to see you, Dan. Dan Bob, the best moderator alive. Guys, I've had a headache all day, but that ain't going to stop me. I'm going to give you guys an awesome show. I'm trying to sip on this coffee, this caffeine, ate some ibuprofens, which Carly called M&Ms earlier, which I thought was cute. All right, so first and foremost, thank you guys so much. We wouldn't be at 8:30 if it wasn't for each and every one of you, obviously, and everybody in the community is absolutely awesome. A few things I wanted to point out because we are getting a little bit more popular. Yes, we're getting a little bit more popular. I feel so cool, right? That comes with some attention of the scammers. We've had 2 scammers out there already. We've had to delete those scammers, so be careful out there. I will never message you. I will never direct message you. I will never ask you for anything. I will never ask you even how you are doing. If I'm going to ask you that, it will be in the general chat. Keep that in mind, guys. The general chat, it's very important that we use the general chat and we keep it in the general chat because the scammers like to lie in the DMs, right? If they slide up in your DMs, there's something going on there. So make sure that you alert Dan Bob, the greatest moderator alive. Let him know that what we have in the background is a scam, okay? So we can keep everybody in the community safe. We know there's a lot of new traders out there, and that way we try to keep everybody focused. It's hard enough keeping me focused. We want to make sure these scammers aren't taking any more attention. Another thing I wanted to talk about, guys, is the noise. You're going to hear a lot of noise. What do I mean by that? Well, when it comes to the teachings that we like to go through, when it comes to base breakouts and trend breakouts, there's going to be a lot of noise. There's going to be a lot of other information out there. There's going to be a lot of different ways of trading, and you're more than welcome to go down those rabbit holes. You're absolutely, thank you, Mama. Mama's here. Thank you. Your info is so great. I appreciate you, Mama. I appreciate you being here. I could use some M&Ms, Carly. Shipping you some M&Ms right out to Missouri. Coming up. So guys, that noise that's in the background, that noise that's going to get you pulling away from your strategy, your process, there's a lot of it out there, and it's easy to give attention to it. Sometimes the noise can be simply your cell phone sitting next to your trading desk that pulls you away from what you're focused on. Sometimes it could be a different ticker. Let's say a shit ticker where you don't usually trade a penny stock, but everybody's talking about it. And if you're not used to trading those, why look at them? Focus on what you want to focus on and make sure it's what you want to focus on. Currently, and I am progressively working on base breakouts and trend breakouts. Sometimes I will stray away from it by using anchored VWAP. Sometimes if I'm going to do that, I always make sure it's intended for my base breakouts or my trend breakouts. So if I want to use a new indicator or use a different strategy, I try to base it around my process, okay? Another thing too that I want to point out is that we always want to make sure that we have buy and sell rules, okay? There's going to be a lot of people out there that are going to say that, they buy, they sell, they do this, they do that, but if they don't have a back-tested strategy that they can show you on paper that they are profitable with this data-driven, back-tested process, then there's no reason in listening to that noise. So keep that in mind, folks. Buy and sell rules are extremely important, okay? Very, very important, so be careful with that. Of course, we were talking about, somebody was talking about wanting to track their trades. It's very important to track your trades. You can check it out in the description. I do have an affiliate link. It's actually, they give you 7 days free to try it out. They don't ask for your credit card or anything like that. That's TraderSync. That's what I use. Somebody was asking me earlier about that today. You should always track your trades. Now, there are free softwares out there. I have used some free softwares. I didn't care for them, so I actually paid for this one. So you can get free softwares out there. Everything that you can find is free. But if you want, you can get 7 days free using my affiliate link in the description. There is no pressure there, obviously, though. Oh, Predator's in here, dabbing it up. What's up, Predator? Good to see you. Let's see. So there's a few other things we can talk about. We'll go over those in a little bit. But I want to start right now by going through the market. And then we have just so much data that I want to cover. So we're just going to focus on the market today, and then we're going to go right into the data. We'll go right into the other things that I wanted to go over when it comes to trading specifically. And then after that, guys, we will bring it open for questions. Sup, homeboy Lou? Yeah, baby. All right, so the S&P 500 did break this 21-day moving average. Okay, this is an exponential moving average. It moves a little bit quicker than your simple moving averages, but it did break it. So I am hands off. The only thing I'm going to be doing is now managing the trades that I'm in. We are currently in 4 trades and 2 long-term trades, okay? If you want, we can go over those very, very quickly. But first, I want to show you the S&P 500 has broke the 21-day moving average. What are my biases towards this? Well, if we break a 21-day moving average, if we don't bounce up from here, or if we do, I'm going to be very hesitant to get into this unless we find either a double bottom or we start to build new higher lows here. But right now, I'm not going to say tomorrow when it starts to bounce that I'm all in, right? All right, and we have some key data that's coming out tomorrow at 8:30 that we'll definitely go over as well. But when I see this and I see this big push on lower volume and then this big push on lower volume, well, where's the volume at? Which way are we headed? Well, we've called this $500 psychological area. We headed up and it just ripped. It ripped hard and it ripped high. And I was waiting for this bounce off the 10-day moving average. Right when we got it, or right when it bounced off this 10-day moving average, I called my broker. I got in for my outside account and we started playing. We started trading. We made a bunch of money on these 2 days. And then we had this big pullback. Now we're managing, right? We've been managing, okay? Risk management. Now, with this down here, we could come very comfortably still back down to this 50-day moving average and bounce and still feel comfortable in this market, okay? After this huge push, consolidation, this sideways action is healthy. When we break the 21-day moving average, that is when I'm standing back and I'm going, hey, we might need to take a breath. We might need to relax, let this thing work itself out before we continue on. Next up is going to be the QQQ. So this is the tech heavy. This is what took the biggest hit. The biggest hit. Yesterday I was telling you everything looked risk on because it was holding this trend, right? The S&P 500 was holding the 10 and the 21-day moving average, but now we've broken down. Now we have broken this trend line. Now we're below a 10-day moving average. Now the QQQ still hold the 21-day moving average, so it's looking all right. All right, let me get a sip of this coffee. We got to stay awake, alert, vigilant. And that's good coffee. Give me a coffee sponsor. IWM though. So this is what was really interesting I found. The IWM popped back up over the 50-day moving average. These small and mid caps were actually stronger today. And I can see it in my account because I'm in 2 of the smaller caps and 2 larger caps. And my larger caps took the biggest hit where my small caps actually kept flexing on them. And I say that pun intended. So the IWM actually had a nice little pop up there, which shows breadth in the market. But if we look at the equally weighted S&P 500, you'll see we are still below this trend line. We're still below all the moving averages, and the moving averages are starting to converge now. They're starting to overlap. The 10's sitting on top of the 21, the 50-day starting to curl down with the rest of them. So this look right here is not pretty for your equally weighted S&P 500, okay? We need to be extremely vigilant here in the market. I gave you guys the warning yesterday. I sent out a YouTube short yesterday. I made a whole video warning everybody that this was your warning. Because the RSP was headed lower, because we did not have breadth in the market, just because the S&P 500 was above the 21-day moving average, I seen some issues. And here are your issues. Now, before we get too carried away with everything else, I do want to look at the VIX Volatility Index. This is your fear gauge. We are starting to see some fear here, okay? This isn't anything crazy. We are getting a nice pop. I'm hoping this will cool off tomorrow, and I use hope respectfully. I do hope it cools down because we don't want to continually see selling action in the overall market. So the VIX Volatility Index popped up. It skyrocketed back up to this 1472. But like I said, with respect, I do hope this continues to head to the downside and we linger in this area. It doesn't always stay stagnant. This thing's always on the move, but we want to keep it down. We don't want to see it start rising in the 21s. We sure as heck don't want to see another COVID up here in the 85s or a financial crash back here in 2008. Okay, the 2007, no, I'm sorry, it was 2007. 2007 back up to the 85s and 90s. All right, so as long as we stay down within this area, I like to see it under that 25, well under 25 actually. I'd like to see it under 20, but our last big pop was the Middle East crisis that we're having, all the wars and everything going on there, okay? So that's about it for that. We can show you what I'm in right now. We have ASP. You can see this was a base breakout strategy. Right here is your base. It broke out. We're still holding on to this. It's just 100 shares. I got this in the pre-market, or I'm sorry, the aftermarket. We're only up about $196 total on this trade. We're using this 10-day moving average now. This is where I entered this green line, this 27.55. That's where I entered in the aftermarket. On volume, it took off higher. And now look, this is my base breakout strategy. It's very, very clear as day. The whole Discord was watching this like hawks on this trade. I ended up getting into this I'm sorry, not in the aftermarket, but just before the aftermarket. Usually I don't take trades right before the end of day, but Dan Bob, I see you. Glad to see you got plastic surgery, no more Two-Face. Yeah, I got some sunlight in front of me now, guys, so that way we don't look so silly on the cameras. But yeah, thanks, Dan Bob. I appreciate that. Let me I'll give you some love in the chat. There you go, baby. But ASPN, guys, base breakout. It ripped up higher. It pulled back, now trading sideways. This is very constructive action for a base breakout. We don't want to see this thing shoot straight up. I mean, of course, if it does, I will extrapolate some of the money and turn it into delicious cash. But in the meantime, if it just wants to trade sideways, let this moving average catch up to it, I'm just fine with that. We just want it to stay above a 10-day moving average because after I took it and it pushed up higher, it traded sideways, I'm going to close once it closes below this 10-day moving average now. I cannot lose money on this. So I'm using this 10-day moving average as my trailing stop, okay? Next is Flex. We're up, I've already sold 2 of my 3 parts. So 2/3 I've already sold. You can see the base breakout was right here, guys. This is a beautiful base breakout. We've went over this a few times, but we need to make sure we hone your eyes into seeing these base breakouts and seeing these trend breakouts so that we all can trade the same. If we're all trading like one another, we can all hone in on the trades. So you can say, hey, Flex is running. Hey, ASPN's running. Hey, ASI is running. Hey, and then we can alert each other to these and we can talk and conflict and see what is the best way to do this. If we just start shouting out random tickers, it's not going to be a good look in the chat because we're going to be all over the place and people aren't going to be focused. So if you are here to focus on those base and trend breakouts, kudos to you. Let's stay focused on these, and that's why we go over these trades. FLEX was a beautiful base breakout pointed out by your boy Covey. Covey, big shout out to you. I know you couldn't make it tonight, but I know you like to listen to these afterwards. So shout out to you, Covey, on FLEX. It's paying me very handsomely. We got in at 29.70, breaking out on volume on this base. We ended up taking out at 2R. We took out 1/3 of the shares. Then I think this was around 6R. I could be wrong. This might be 4R. I'd have to measure it. We took in another 100 shares, and now I'm letting that last 100 shares run. Where is my stop loss? Well, of course, when it breaks below this 10-day moving average, that's my stop loss. Well, as this continues higher or trades sideways, the 10-day moving average will catch up to it, and hopefully it forms another base that I can add into. But until then, I will not lose money on this last 1/3 because I've moved my stop up with the 10-day moving average. Last but not least, Mo Wealth actually pointed this out in the chat, and this just goes right with what I was saying. I've gotten 2 of these 3 from our community members because they say, hey, take a look at this. And I say, this is beautiful. This is my trend breakout strategy. Now, this is a bit of a slower mover at 3.4%, but you can see exactly the trend. Here, it's trending down, and you have an ascending triangle up here. And then it breaks out here on volume. What did I do? Well, I took a 400 shares about right here, and I just let this thing ride. I have not taken any money out of this. I will close out once it closes below that 10-day moving average. We're up about 220 bucks in this. So we still have ASPN at 200 bucks, FLEX about $407, and FMAS another $200. So close to $1,000 in that trade. We also are still holding 1/8 of NVDL. 1/8 of NVDL. I have sold almost all of my shares into this, but I'm holding that last 25 shares until it breaks the 10-day moving average. It's so extended. I think I'm going to be holding on to this for quite a few days now unless we continue to have bigger pullback. Now, we took this at 50.23 the day after earnings. I don't play the day of earnings, but the day after earnings. And then I played that 10-day, or I played the opening range break. That's my third strategy. I don't teach that strategy just yet, but maybe we will do a masterclass on it on Tuesday, how to enter these trades. Now, we entered this on the 1 minute time frame using the top of the 1 minute and the bottom of the 1 minute, the low of the day as my stop loss. We exited out after 1R. Then I let the rest ride to here, here, and here. Now I'm letting that last piece, holding on to this until it breaks that 10-day moving average, okay? So that's about it for what I am currently holding. And I'm just going to hold this, guys. I'm just holding what's in my book right now. I'm just actively managing. Now, if anything pops up, it needs to be a very, very good setup. But when we're below this 21-day moving average on the S&P 500, I really don't trust anything. I don't trust anything. If anything, I'm going to look for shorts, but that's not something that I take on size. It's not something that I really, it's just to hedge my account, okay? So I stick to my strategies. I stick to the base breakouts, the trend breakouts, and if I am to take a short, it's going to be an inverse triangle, meaning it would be running into resistance at a base or running into resistance at a trend where it's going to fail, okay? So it's the same strategy, it's just reverse, okay? Okay, that being said, I want to say a few other things. We talked about tracking your trades. One thing I wanted to say too, not trading with your emotions. So a lot of new people are in here. You know when you're trading with emotion. You'll get excited. If you're excited when you're trading with emotion. If you're mad when you're trading, whether you're mad at somebody else, you're mad at yourself, or you're mad at the last trade that you took, you're trading with emotion, okay? If you get that weird feeling in your stomach where you get those butterflies or those tingles, you're trading with emotion. You don't need to be trading with emotion. Now, you can use emotion to know whether you should be in or out of a trade, right? But you can't trade with that emotion. You can use that as a trigger, but then you have to revert to the mean and then take that shares with logic. You don't just take it and smash 500 shares because it just feels right, right? No, you need to make sure you understand the risk management, where your in is, where your exit is, and then how many shares you're taking, and know exactly what your risk is. So if I usually risk $100 on each trade, and then I just get in by smashing whatever, and I don't know how much I'm actually risking, that's using emotion, and that's what we're trying to keep from, okay? Now, we got 10 of you in here. We know we got a poll up here. Wow, we got 20. I like this. So the question on the poll, let's just take a look here. The question on the poll here is this. It says, are we heading into a bear market? Yes, no, or tacos? That is hilarious, guys. Go ahead, smash this like button. Look at the screen here. Smash this like button. I'm going to refresh this page. Let's see how many we got. Let's see how many likes that we have up here. We got 8 likes so far and 10 of you watching. We can do better than that, crew. We can do better than that. Smash that like button and go ahead and vote on the poll. We already got 10 votes on the poll. I really like where we're at right now. 50% of you say no, we are not heading into a bear market. And I would have to agree with that, but I definitely agree with tacos. That's for damn sure. All right, so let's keep an eye on that. And let's see. Keep up on the chat here. Okay, cool. 100. All right, cool, guys. So now that we got through all that, there's some economic stuff that we need to talk about today, the GDP that came out. If you watched my YouTube video, you'll know that the economic data for the GDP, or the gross domestic price, came out today. What is gross domestic price? It measures the annual change in inflation adjusted for all goods and services produced by the economy. Okay, it came out lower than expected today. You can see that right here. It came out much lower than expected. The forecast was 1.6, the actual was 1.3. Now, this should have been very, very nice for the overall market, showing that those 5.5% interest rate cuts, or rate hikes, I should say, are actually doing very, very well for the economy. It's actually showing that the economy is having some restriction and that people aren't buying as much, that there's going to be less demand for things, meaning that prices should come down and the overall sticky inflation will actually be dampened a bit, okay? That's what old Papa Powell wants to see. But do we have a new fear? Do we have a new fear out there? Is it the recession? That's the question, okay? So with this data comes some other issues, right? The higher the lower the GDP, the higher the contraction of the economy means that we're slowing down. Are we slowing down too much? Are we going to start fearing a recession? Well, keep in mind too, initial jobless claims came out, and it also showed that we had more people filing for unemployment than we were expecting, more than the previous month as well. Okay, so that also shows economic contraction. And so far, all the data has led to this issue with sticky inflation. So if we are worried about inflation, and then we have data coming out showing us that inflation is not there at nearly as much, well, then we get a negative day. That's not a good sign. Well, there's a couple of other issues out there as well. We have U.S. core PCE coming out tomorrow, year over year and month over month. So currently right now, the core PCE index, let me just read it to you. It's less volatile. It measures the PCE price index, which excludes more volatile seasonal foods and energy prices. So it's like the GDP, but it's going to exclude the energy and it's going to exclude the food prices. Okay, so the price of eggs doesn't matter so much anymore. So when somebody says, well, what does that have to do with the price of eggs? Well, this does not have to do with those price of eggs, okay? So keep that in mind when we look at this core PCE. We do want to see this lower as well. You can see back here in January 2022, 2023, it was much higher. We want to get our inflation rate down to 2%. Now, this isn't depicting the inflation rate. The inflation rate is the current U.S. inflation rate is right here, 3.4%. The goal for the Fed is to get that down to 2%, guys. We want to see the U.S. inflation rate down to 2% because inflation is always constantly going up. All we can do is help tame that inflation rate, okay? So keep that in mind. That's some good coffee. I don't know. I don't care what you guys think. It's delicious. And now I'm going to be up all night, but the wife's got me doing stretches after this, so she's putting me to work right after this, so I might as well drink my coffee and stay awake. So that's going to be a very big driver in the overall market. Papa Powell is going to look at the PCE data and he's going to say, okay, what is the price of eggs, right? Or actually, he's going to say, he's going to say, what is the inflation without the price of eggs, okay? Without the price of gas, okay? And when he looks at that, that's going to be the actual biggest thing that Papa Powell looks at, where he is going to use that to fix those interest rates. Meaning, if he looks at this and it's much lower, he might take this into consideration to actually lowering that rate. And now, when you say, well, lowering the rate, well, what's the rate at? Well, the rate's at actually, everybody says 5.5, but it's actually 5.33%, okay? Now, with that being said, it can be anywhere in between 5.25 and 5.0. After the data that came out today, it actually raised the eyebrows of some speculators to say that we might actually get a rate increase. Now, it's not by much. It's only by 3.9% in June. We're definitely more expected to stay the course through June and also through July. If we look at July, we actually have a more teetering towards the quarter of a rate cut in July at 12.3%. But I've been saying this for months now because this is the way the Fed tool has been sitting. In September, it looks like we are due to come down a quarter of a basis point. And I stick to that. Why? Because every time I've looked over here, we actually continually to increase that we might come down a 0.5% by then. Okay? So we are teetering more towards a cut in September, a quarter of a point. Now, after the PCE data comes out tomorrow, this Fed tool will change and you will be informed because you are liked and subscribed on this YouTube channel, and I bring this data to you every single day to your sweet and beautiful ears. And we like to keep you updated because why? Well, when the Fed is ready to cut, you better believe those markets are going to start ripping to the north side. Norman Conklin, what's going on, brother? Yeah, recession, fear, and stagflation. Yes, absolutely. Yeah. We were so fearful of the interest rates, or I'm sorry, the sticky inflation. And now that sticky inflation is around, we have a new fear, and that's the fear of recession and stagflation, right? So, yeah, Predator said scammers. Yeah, I know, man. Getting some scammers. Isn't it? It's great though. I mean, it's like once you get a few haters, right? You get a few haters, and it shows that you made it, right? If people are talking crap, you know that you've made it. You get a few scammers, you know that you've made it, right? We're making it, baby. And it's all because of you guys, honestly. It really, really is all because of you guys, because I would not be here being able to do all this streaming today. Thanks for that subscription, brother. Thank you. I appreciate you very much. All right, so what is up next? Let's see what we got. Stretches isn't a code word for the kids. No, Dan Bob, I can't believe I read that out loud. No, it's not a secret word. No, I got to stretch, man. I've been working out. Can't you tell? I'm getting all swole. No, okay. Let's, I want to show you guys a few things here. So today, when we look at this on the daily, you can see where the breath came in the market. Utilities went higher. Real estate, which has been beat down, has been really beat down the past year or two. Materials, industrial, healthcare, financial, energies, consumer staples, and consumer discretionary all did well, while the leaders in the market, like technology and communication services, actually took a small hit today. Well, when I say small, technology took the biggest hit at 2.28%. So we're going to keep an eye on that. But if we look at the past 5 days, you can see technology actually still is up there, but with healthcare as well. In the past month, though, you can see that these were our leaders: utility, technology, communication services. So to take a hit is not to say it's too out of the ordinary. We cannot go straight up in these. But when we look at this on the daily and we look at this each and every day, we can see what is taking off, what's still holding up. In utilities, it looks like it is still holding up very, very well in a market pullback. Now, one thing I do like to look at, and I figured I would just sneak this in on you guys, is the simple fact that we have this ape wisdom. I do like to look at this because it shows what everybody's been talking about. It's the trending stocks on Reddit. Recession fear is only about 7%. Yeah, actually, Predator, can you send me in the general chat where you're getting that information? Because I actually don't have a recession gauge just yet. I was so focused on inflation for so long. And I think it was double that last quarter of 23. Yeah, very interesting. That's very interesting, Predator. I'd like to actually go over that data with you very, very soon. Maybe tomorrow morning we can go over that if you got extra time. I would like to get more into the recession data myself, especially because it's becoming a lot more prevalent. So this is the Ape Wisdom tree. This just shows the most talked stocks on Reddit. We got NVIDIA, obviously Spider, Salesforce, which took a huge, huge hit, I do believe. Let's just take a look at it. CRM. So yeah, it took a big hit on this earnings. And it looks like they did well on the earnings per share. So I'm sure there was some news in with this. But guys, this right here is why I always say we do not play earnings, because you cannot predict earnings. And even if it comes out positive, it still can take the biggest hit. You never know what forces are behind it. And if somebody tells you that they knew it was coming, then you're listening to the wrong guys, okay? Nobody has a crystal ball. Nobody can see the future. And if they did, they wouldn't be talking to you. They would have way more money. They would probably have their lawyers talk to you, right? Only kidding, but not really. So next up is we have Dell. So DELL. Let's take a look at Dell. And I like to look at these guys because a lot of times you'll notice that we have been watching these, right? You can see these trends right here. Here's a beautiful trend break strategy. Here's another trend break strategy. This one actually would have stopped me out. We like to point those ones out too. This one's a little whopper jawed, and I would like to see it play out a couple more days. But this here, this Dell is absolutely beautiful. But what I like to point out too, as well as I've already pointed out with the video before, is this is looking like a traditional blow off top, meaning we get this huge ran up, this huge euphoria in this technology sector, and it just runs up so high, so fast, so far that it's going to all come tumbling down. So I'm not calling that. I'm not saying that's what it is, what it's going to happen, because I always want to be hopeful for the U.S. economy, for the market, to expect it to go higher. But this is just one of those things, right? It's one of those things where this is looking very euphoric, very euphoric. That is a possibility. There's ASTS, which looks like it is a Space Mobile Incorporated. I don't like the look of this. This is clearly a pump and dump stock, so this isn't something that I'm too interested in. Of course, we have the Trump media, DJT, with all of the political issues that we have going on here. I still want to point out that we have a base here, okay? Now, this is what I would consider a shit ticker. I don't think this Trump media is going to go anywhere. But if we play price action, we can see that we do have a basing area. Now, I did call this out down here at this bottom, even though it wasn't following anything. I said, don't sleep on DJT. I've seen this thing play before. And when we started in this $26 area, where can I find it? The very next day, in the beginning of last month, I said we were getting volume to the north side. We are starting to get volume to the north side, to keep an eye on it, because it might set up on our strategy. And sure enough, it came all the way back up, and now we're trading in this area. I have my alert. It almost set it off today at $53. Why do I have that set? Well, because this is a base breakout here, guys. This is a base breakout. And if it can break through on volume, I think we can see continuation all the way back up to the $70 area. I do not think it's going to get past the $70 area, but these aren't buy or sell recommendations either. I'm just looking at, this is the biggest area of volume down here. Look how big this area of volume is. It's huge. So I take the volume weighted average price at $70. I'm also using a psychological area of $70. And I'm going to say, hey, if this thing can break out, I think the $70 is a magnet to get to the area of the liquidity. So there's liquidity here at $70, and I think that's what can happen. And if that's what happens, you better believe I'm going to be there to sell. I'm going to be here to buy it and be here to sell it. Okay, I'll play it on both sides. So this is the base breakout strategy, and this is the gap up short strategy. But I haven't taught you guys that because I have not back tested that strategy, and I'm also not profitable with that strategy, but I am with the base and trend breakout. So that's the only thing that I'll be teaching you guys. Now we have a few other things that we can look at, but I want to get back into a few other things. This is why it's so good to be an optimist. First of all, we will go over really quick. This is the weekly stock market update that I got from Edward Jones. Okay. Now you can think whatever you want to about Edward Jones. I have my money with them, and it definitely I definitely don't really believe in those big leaderships, right? Stick it to the man kind of deal. But when it comes to reading some of their things, it can be very eye-opening. So I read everything that they send me, And I came across a few things when it came to what they were saying about their bull market, okay? What they think about this bull market, and it makes a lot of sense, okay? So if we get right down to the bottom line, or the current bull market most likely has legs. And why are they saying that? Well, they are speaking historically. Bull markets are longer and stronger than bear markets. Markets that are down 20% or more is what they're considering bear markets. So make sure you mark that down. In fact, since 1946, the average S&P bear market has lasted about 16 months with average declines of 34%, while the average bull market has lasted 5.6 years with the average gains of 192%. Okay, so keep that in mind that bear markets are a lot shorter and they head down a lot less further. Okay, so 16 months to 34% in a bear market and 5.6 years with the average gain of 192% in a bull market. Now take a look at my screen here, guys. This will give you a beautiful graph so you can grasp it. They paint a graph so you can grasp it, okay? And this is absolutely beautiful, and you can see it's dated all the way back to 1946. And that's why I wrote down here, you need to be optimistic. Because if you are constantly one of those people that say, oh, it's going to fail. Oh, it's headed down, right? Oh, this is the top here, you know, and I've came across so many damn bears in my history of doing this, and it makes me sick to my stomach because, first of all, it's no way to look at the market. It's no way to look at the market. Now, it's good to be aware. It's good to know. It's good to know. It's good to be there, but you always want to be optimistic because if you're always a pessimist, this is how much you're going to be right. You're going to be right, what does it say, 36% of the time? 34% of the time. You're going to be right 34% of the time. Where if you're an optimist, look at this. If you're an optimist, right, you're going to be 192% of the time. Now, I know that that's a bit skewed when I say it like that, but I'm just trying to show you bull and bear. It's better to be a bull because you're going to be right longer rather than being a bear. But you know I like to be a bear with bull horns. I like to play both sides. I like to know both sides of the story here. But when we look at charts like this, historical data, it's better to be an optimist in the overall market. It's better to, because you have a 401k, a Roth IRA, or any vehicle that has a strategy to make you money for the future is very, very important here. So make sure that you stay optimistic. You can be weary. You can be informative or know what's going on in the overall market, but it's not good to be a pessimist. It's not good to be a bear, okay? Now you guys know I've been a bear for a day or two. You know right now that I am hands off, okay? And I'll be willing to look for shorts, but I am always going to be optimistic in this overall market. So if you come across a pessimist, just think about this short, or think about this chart here, okay? Think about this chart. This is absolutely beautiful here, guys. This is absolutely beautiful. I absolutely love this chart. I think I'm just going to go ahead and do one of these. We're going to save this chart for the future. And I might even do a little YouTube short on this later because this is an absolute beautiful chart. So yeah, I just read this. I read this thing and I thought of you guys and I thought, man, I really want to show them that. I want to show them just why it's so important to be an optimist. Okay. Let's see. One last thing too, guys. Let's not try and hit home runs, especially if you're just starting out. We want to have a nice, easy, positive P&L curve. And I say that for myself too, because there's been so many times where I've been on such a good run where I just wanted to smash it. I wanted to smash 1,500 shares when I know I should only be taking 100 or 200 shares. Just smash it with everything that I've got. Use full margin. Go $200 in one stock. $200. Huge account, right? $200,000 in one stock and just give it all. Give it all, you know. But that's not part of the process. You need to be very, very careful out there. You need to learn to live to trade another day. That's the most important part. Okay, guys? So we're going to open up. You guys have any questions? Are there any stock tickers that you want to go over? If not, I actually have some stock tickers that we can go ahead and go over here. Let's see. I got a list in front of me, but I'm more than happy. Norman Conklin, thank you very much. I do appreciate it, man. Yeah, it's, you know, I get to thinking. I was doing the dishes today, And I just started writing all this stuff down because there's so many new traders in here, man. So many new traders. And, I start talking a lot of recession or inflation. I start talking a lot of key data points. And when I get to doing that, sometimes it can be kind of boring, I guess, in a sense, if you're not a nerd like I am when it comes to this stuff. So I like to talk about the psychology of things because really when it comes down into it is how we're going to make money, right? We're all here to make money. Everybody wants to make money. And I feel like the more times I say money, the faster my subscriber count's going to go up, right? PSTG, that's a great one. Let's start with PSTG. So PSTG was absolutely beautiful today. Let me just go ahead and get rid of this. I actually took a small loss on PSTG today, but this was an absolute banger of a stock that actually ended up pulling down. You can see this huge downtrend line. Huge downtrend line. This is a trend break strategy. This thing ripped back up. This is pure storage, okay? This is an absolute beautiful stock, guys. Beautiful stock. They had a little bit of issues the day after earnings, and that one is very, very interesting. But we had this huge downtrend here, and it broke above this downtrend. And if you could have caught this downtrend, I did not. I did not catch this downtrend. But there was also, we talked about this in the Discord, there was also this base breakout. And that's what's beautiful about these two strategies. It's beautiful. I see NVAX. We're definitely going to go over that too. So PSTG, trend line right here, absolutely beautiful. Then it formed a base breakout here. We had double trouble in this beautiful stock. If you could have caught either one of these, you would have been paid very handsomely and you would still be in the stock using our strategy, the break of the 10-day moving average. So if any of you are in this, I need you to let me know because this is absolutely beautiful. I wouldn't even worry about this. I really wouldn't. It is a big sell-off. Until it breaks that 10-day moving average, I wouldn't be worried about it if I still own this stock. Of course, you would want to take a piece out if you were able to in this area, but it would have been pretty hard to because it moved pretty fast. So let's move in here. I actually want to move in here on the hourly and just see. So I was actually keeping an eye on this today after that huge trend. But yeah, in the pre-market, it moved right up, scooted way up here, pushed up to crazy all-time highs, and then just scooted right back down to where it came from. So I still think, all of this, I just think somebody fat-fingered this, honestly, and then got out of it for a huge loss. If you don't know what a fat finger is, it's an accidental buy. So you can see it just went up really, really fast, really, really fast. Or maybe he bought, and then didn't realize he was going to be up so high and then just hit that, just sold into whatever he could and made, 8-10 grand right there. Who knows how much money he made, and then just settled back down. Now they're accumulating shares again. Who knows? It might be the specialists in here doing the same thing. But Pure Storage looks like they did really, really well. They were expected a negative earnings forecast, and they actually made money earnings per share. So it was beautiful to see. So thank you for bringing that stock up, actually. This is actually such a beautiful stock, and I really wish I could have played this one way or another. We called this PSTG out. Actually, Adam and I were going back and forth, or Covey, sorry. Covey and I were going back and forth on this, why I thought this was a beautiful base breakout, why he thought there was some issues with it, but you can see these new higher lows that were formed, this beautiful base here on top of a trend, and it just rip tater chip to the north side. So beautiful stock to bring up. Beautiful stock. Very nice, Kevin. Really appreciate that. PRMW. Let's take a look at that one. Let me bring up the daily here. And guys, just while I have you guys here, go ahead and look at my screen really quick. There's a few things I want to have you do. Go ahead and smash this like button. I'm gonna refresh this like button here in just a second, and make sure you vote. I want to see what you guys think. Are we heading into a bear market? That's the question. And right now, 23% of us say yes, 54% of you say no, and 23% of you absolute geniuses, you big brain geniuses, say tacos. And I absolutely love tacos, so I can get behind that 110%. Let me refresh this page. Let's see how many likes we're up to now. Let's see, 12 likes. Woo! Now we're doing it, baby. Let's go. Let's go, baby. Absolutely love to see that. And if you guys haven't already and you're in this room with us today, please hit that like, hit that subscribe button. We absolutely love that self-preservation. I want to keep on keeping on, baby, and I want to do it here with you, with me. PRMW. So PRMW, Primo Water Corporation. Very interesting. I bet this is a utility. Let me check and see if this is a utility. So let's see, PRMW. This is consumers non-durable beverage. Okay, so this is a beverage. I should have known that, but hey, I figured it was a water company. So this thing has been ripping to the north side. You can see there was one area where we could have gotten in. This could have been a base breakout. This thing is continuing higher, still holding that 10-day moving average. Absolutely beautiful there. I absolutely like to see these trending stocks to the north side because they might give us better opportunity in the very near future. There's a trend breakout right here. This looks really good as well. I will say this is a slower moving stock. It only moves 2.6% at a time, but with this huge push on volume and this break back down, making a base, this still is trending very well to the north side and actually held up most all of its gains today, even though the S&P 500 pulled back. So that's very, very nice to see, and very good call, Dan Bob. Drink some water. Very good call. All right, let's take a look at NVAX. And if you guys have something that you want to see, throw it up in the chat. NVAX is looking absolutely beautiful. I played this one today. I ended up getting out of it because I didn't want to hold it overnight, especially with the key data of that PCE coming in at 8:30 tomorrow morning. Okay, so let's go ahead and look at this on the 5-minute or the 1 hour time frame. You can see, if we look at this on the 1 hour, you can see my trend break strategy here. This is beautiful downtrending trend break, a trend strategy, holding on to that 10-day moving average, getting very, very tight here. Now I'm going to reset my alert right here, just above that trend, so that way if we can get above it, I will take this again. This right here is where I took it. Why? Well, let me just zoom in on the 5-minute here, and you guys will see why. So if we zoom in on the 5-minute, you can see this is where the trend, and this is looking real messy. Let me clean this up for you. Let's clean this up a little bit. So we got this breakout above the trend line, and boom, I get in on higher volume. Now, it wasn't anything crazy. It wasn't the highest volume bar of the day, but I felt comfortable because the very next volume bar was even higher. Okay, I set my stop just below this area because I did not want to take this chance towards that end of day. Okay, usually I don't take these in the afternoon or afternoon, but we decided to give this a shot. So this was around what, 3 o'clock? So later in the day. See, 13:25, so 12, 1, 2. Yeah, so about 3:25 that I decided to get into this thing. This is not the time that we usually get into these stocks. It's usually in the morning, somewhere around this area. This set my alert off the first time, but we didn't take it because there was no volume. There was volume in here, and that's why I set my stop so close. Usually it's the low of day, but on this very fast-moving stock, if it wasn't going to break out and take off because of the way the market was looking today, I decided to be hands off of it, set my stop very, very close to this low, and then when it did stop me out, I just kept a close eye on it, waiting for more volume to come in to get back in, and it did not. So it was a very good decision on my part. I played my process, and I played it right. So I'm very happy with what I did here. This is a beautiful trend break, and I would love to see this break out one more time on higher volume. I would love to try this again, especially because if we look this on the daily, it's getting very tight. Okay, we had an inside day here, so that looks really, really good. Let's see, VITL, that's another great one, VITL, and this, I love you guys bringing this stuff up. VITL, so there's nothing to play here. This is just a beautiful trending stock to the north side. You can see right here, and I do think, did we try this? I don't remember if we tried this, guys, but right here is your base breakout. Absolutely basing out right here at the top. You could have taken this trade and actually made some money. Now, this may have stopped you out if you were squeamish on this pullback, but it held and ripped up higher on earnings. Now, we would have been out before earnings, but you can see it created a nice trend, but it didn't get close to that 10-day moving average. So this thing is just holding that 10-day. It's doing very, very well. I know Bob Dan has been watching this for quite some time. Very, very cool. ETRN. Let's take a look. ETRN, same thing. This is definitely one to keep on your watch list. I'm going to throw that on my watch list right now because I'm not sure if I actually have ETRN. It's a slower mover at 2.1 or 2.6. So I don't usually play these slower movers, but we're going to want to watch this and go over it each and every day. So that way, if it does set up a trend or a base breakout, this might be something in the very near future. Now, since there are no more tickers in the stock, we can go over a few that I have on my watch list. We have ADI. Let's take a look at ADI. ADI, you can see right here, it's forming this beautiful trend after earnings. This thing rip, tater chip to the north side. Amander, I don't know if I'm saying that name right, but we'll take a look at CRWD right after this ticker. No problem, brother. Amrinder. Amrinder? I'm sorry if I'm not saying that right. It's probably Indian, and I'm not very good at pronunciating those, so bear with me on that one. So we'll get to CrowdStrike here in just a minute. So ADI, this is analog devices. This is beautiful trend break right here. I want to see it break above this tomorrow. If we can see this break above this, I'm definitely going to take this play. These aren't buy or sell recommendations, though. This is just my thoughts, not yours. We can see here's the trend. Beautiful trend right here. You can see it just traded outside the trend, traded sideways on a day where everything was pulling back. And if it wants to break above this high of yesterday, or of today, which tomorrow will be yesterday, this thing could break higher. If it does it on volume, we'll be there for it, okay? So make sure, if you guys aren't already, you absolutely need to join the Discord. It's in the description, guys. It's absolutely free. We all do these base breakouts and these trend breakouts. That's what we all focus on. And if you join the Discord, we come in here. We talk about this constantly. We constantly go over these exact things that we're doing live here for you on Thursdays, okay? So ADI is definitely one that I have on my watch list. So let's take a look at CRWD. So CrowdStrike. Now, CrowdStrike, if I remember right, this is, isn't this in the Bitcoin holdings? CRWD. Let's just take a look. I'll read it out loud. Technology, service, and packaged software. Excuse me. Yeah, packaged software. So CrowdStrike provides cybersecurity produced and serviced to stop breaches. It offers cloud-delivered protection across endpoints, CloudWorks. I should have remembered that, CrowdStrike. So it's going to go with CRM and all that good stuff. And they're going to obviously take a hit today. The only reason why they're going to take a hit today is because they're a lagger to CRM. Okay, so let's just go back to CRM. Salesforce. So Salesforce is that packaged software too. So if we look at CRM, it'll come up and you'll see right here that it is technology services packaged software. But CRM has been known as the leader, as where CrowdStrike is usually the lagger. And you always want to know which sector you're in, because if CRM is going to take a big hit, then you better believe CrowdStrike is going to take a big hit too. So as of today, CrowdStrike did take a big hit because of CRM, so it's sympathy. And yes, CrowdStrike does have earnings. You're absolutely right. We'll take a look at ELF here in just a second, Kevin. Let me go ahead and clear this drawing set, and then we'll zoom in here on the daily. And you can see here that we had this big drop off, this big drip, as I like to call it. I call this the big drip because it gets real choppy, then it gets real tight, and it starts to slide on down. And that's exactly what it did. It caught down here at 279 and pushed up higher. Now, it's going to take this big hit because of CRM trading now below all the moving averages. And I hate to see it, but that's exactly what happened. Now, they do have earnings coming out on the 4th. And as you guys know, I am not hands-on when it comes to earnings. So earnings on the 4th, that should be coming up in just a few more days. So next week, CRWD would be very interesting if, let's say, CrowdStrike comes out with positive earnings and this thing rips up to the north side, clears this 365, and shows us that it is the leader in the market, that CRM isn't doing it anymore, that CrowdStrike is now the leader, and it says, hold my beer, rip, tater chips to the north side, we might have an opening range break on an earnings continuation or even possibly an episodic pivot. Now, I haven't went over those strategies with you. They're pretty in-depth, but we can definitely do that if this comes about. So let's keep that on our watch list, Amrander. Let's keep that on our watch list for the very near future, because that is going to be an interesting earnings call for them. Let's take a look at ELF. So ELF used to be the leader. I believe it was 2023. Yes, 2023, it was the leader, and everybody wanted a piece of ELF. This is the natural beauty, or not natural, the opposite of natural beauty, right? Let me take a sip here. Yosef, what's up, Yosef? I didn't know you were in here, you creeper. Just lying in the dormant. Good to see you, Yosef. Yeah, we'll go over that in just a second. So ELF, they had a beautiful run-up in 2023. I think even as far back as 2022, they started their run-up. Into 2023, they had a pullback. they showed that no, we can still be the leaders. And then here in 2023 into 2024, they ripped all the way up to 221.83. I was actually looking for some trend breaks on this, but you can see this is what I mean by getting choppy, where it gets nice and tight, nice and tight, nice and tight. And when it starts ripping up like these, just like I was talking about in Dell, where it's like blow off tops, you can see this is a big blow off top here. It starts to get real choppy. And then I tried to wait for a nice area for a trend break strategy. And I may have tried to take this, but was stopped out the very next day. So you can see here, this thing just kind of chopped around and then headed lower. Now, on earnings here, you can see they beat their earnings by much higher than expected, actually over double on their earnings per share. And that's why we get this big leap and bound. Now, I will like to say this is a beautiful area that we might be able to find a nice trend because it's already starting to trend out right here on the daily. So if we can keep a close eye on this, maybe that 10-day moving average starts to catch up to this and it starts to get tighter. So definitely, if we don't have ELF on our watch list, this is something that we might want to keep an eye on for the days to come. Just like Abercrombie and Fitch, it held through those leaders and then it pulled back when the market did on those bloody 6-day sell-off, and then it rip tater chip to the north side. Can ELF continue to do the same thing? Does it have more room to run to the north side? I would like to believe that it can if it keeps showing these awesome earnings per share like this surprise that it had. So yeah, Kevin, I do like that. Kilgore, I like Kevin Kilgore. I think it's got a ring to it. It's definitely way better than David Worrell. I even have a hard time saying my own last name sometimes, man. So Kevin Kilgore, thanks for the ELF. That's a beautiful stock, and we definitely want to keep that previous leader on our watch list, and it might come back into fruition being another new leader. Yosef wants to bring up NU. So NU, I remember looking at this before, and Yosef, this is the kind of crap I like, dude. This is why I love having this community right here, because this looks like a nice base. Now, I do have to point out that this base is starting to look pretty choppy. Why do I say that? Well, usually you get these nice tight candles here and then these nice tight candles down here, as to where these are pretty big. It's starting to get pretty big and wonky. So let's figure out what NU is, and let's see exactly what sector it is in. So NU is the technology service or information technology services. So wow, very interesting, because we know today, guys, that technology took a real big hit. So if this is in the technology services, you can see here, thank you, Dan Bob, I appreciate that. You can see here in the NU that it actually held up very strong today. So it's very interesting to see. So maybe I just set my alert right here just so I can be alerted when it does get back up there, because we have this nice area that it cannot get above, which is roughly 12, we'll call it 1230, okay? Last time it broke up above 1230 was its earnings and it got sold off hard. Now it's teetering around this 21-day moving average, creating this nice base. It's a little bit odd, a little bit of an oddity, especially with the shifting going on here, okay? All this shakeout, all this shifting. But if we can get a nice push up on volume, that would be nice to see for NU to have continuation higher. Now, it looks like this is a more recent IPO, so a big dip, and we're coming right at that. Wow, actually, this just got a little bit more interesting, guys. Let me put this on the weekly so you can see what I'm looking at now. Let me go ahead and get rid of that, and I'm going to mark the all-time IPO high. Look where we're at. You know what? Kudos to you, Yosef. I don't know if you've seen this before I did, but this red line right here, ladies and gentlemen, is the all-time high for NU Holdings at its opening IPO price. Why is that so important? Because above this area is blue skies, baby. And you want to be a part of that blue skies, because if you are, this thing can really get some legs and get to rip tater chipping to the north side. So let's go ahead and keep NU on our watch list. Yosef, I appreciate that. I appreciate you, and I appreciate everybody else in the chat. If you'll do me a huge favor, look at my screen really quick. We call this self-preservation, baby. We already have 15 votes on this poll. If you haven't already, we're going to close this poll in 3 more seconds. We'll give it 15 more seconds. I want to close this poll so we can go over it really quick. But if you're here, hit this like button and make sure you smash that subscribe button, guys. I'm going to hit the refresh button so we can see what we're up to now. But hit that like button. Make sure you vote on the chat, and then we will see where we're at. This is self-preservation, baby. So 831 total subscribers. We have 11 likes. That's absolutely amazing, and 15 votes. We're going to go ahead and end this poll, and we will see. We can't do it that way. We'll end this poll right now. Here we go. Boom. So heading into a bear market, 46 says no, 26% says yes, and another 26% says tacos. Absolutely delicious, guys. I'm glad to hear it. Well, we've been on here for 1 hour now. Thank you so much for smashing that like button, smashing that subscribe button, and being here to support me. I can tell you right now, if you were here and you made it this far, you are here doing yourself a huge favor. You are setting yourself up so you understand what's going on in the market tomorrow. Remember, 8:30 is that PCE, and we have plenty of watch lists. But remember, under a 21-day moving average, we're only looking at those 5-star setups, and it has to really drag you into the stock because I am hands-off right now. So be very, very careful out there. Enjoy yourself a taco. I hope you guys have an amazing night, and we will see you in the Discord tomorrow. Wait, what's tomorrow? No, tomorrow's Friday, so we won't see you in the Discord till Sunday. We have a meeting on Sunday at 9 o'clock so we can have another prep. But I will still be in the Discord tomorrow all day while we trade. So if you guys have any questions, we'll see you in there. Go down into the description, hit that like, hit that subscribe button, join our Discord. Everything's absolutely free. And God bless you guys. Tacos.